Do you really think you'll learn and grow and achieve without failing? Maxime Lagacé. My friends, the answer is no. You've got to get out there. You've got to get on the field. You've got to play. You've got to get hit. You got to get knocked down and you got to get up and keep getting up. The prize goes to those who persevere. 10 to 15 minutes a day, that's all we ask. Let's talk about these markets. First, a little heads up. Neither one of our weekly vertical crossovers came to fruition. The first is on the S&P 500. We had the possibility of a weekly vertical crossover going up. We're not excited about it. Why? Derivative oscillator still quite negative. The price percent oscillator had been hanging around this same signal line for quite a while, not moving far away from it or through it. Even as we ended the week, as we look at it, we can see that the price percent oscillator is just a little below the 8-period moving average line. So no dice, did not occur. And again, remember our leading indicator, which is the derivative oscillator, triple smooth version of the relative strength index, is still quite negative. So that did not happen. Did have a big green up candle for the week. As we look a little closer, we go to the 2-day. You can see where things popped up on the first candle there on the Monday-Tuesday candle, and then a little bit higher on the Wednesday-Thursday candle, and then, of course, what happened on the first day of this latest Friday candle, still above the trend line, but again, went from a green, nice, good-sized candle to a red open box, which is a slowdown in the up movement. Price percent oscillator also flattening. Derivative oscillator still gaining some momentum the first day of that latest 2-day candle, which you can see for a day and a half how things have devolved. Didn't cross over going down on the half-day chart, but right at it, getting close. So we'll see how the new week starts out. We blew through that half-day trend line in the morning on Wednesday and really just slid sideways and then started moving down as we got into Thursday afternoon and Friday. So no pass go, no collect $200, no weekly vertical crossover. So we're still negative on the weekly. 2-day is still confirmed up. So we go to 20-year bonds, not there yet. We go to the Nasdaq 100. What do we see there? Well, a green up candle similar, but not as close to crossing over as the S&P. We see the tech stocks just flat on the price percent oscillator, derivative oscillator gaining downward momentum. So we look at the 2-day, and of course, it's almost laminated. Check out that 2-day. It's not crossing over yet going back down, but mark that on your show notes. Take a look on Monday, because remember, this 2-day candle does not finish drawing until Monday. Is it going to pull through and actually bounce off and give you the ability to jump back in to a down move on the Nasdaq 100? It may do that. So pay attention. If you're filling out your weekly market worksheet, which all of you should be doing, in fact, just start with that. If you don't want to do the daily worksheet every day, just start with a weekly and see how valuable that alone is. That'll encourage you to start filling out the daily. And once again, I'm going to put at the end of today's video all 3 worksheets so you have them. And in fact, what you'll see on those trainings are how to fill out those worksheets. Those worksheets are attached to all of the emails you get each and every day. It's a PDF. And again, go to chartingwealth.com, sign up and subscribe, and you'll get those emails on a daily basis. Also, you'll get a good training that comes along with them. There's a special training for you today, as there is every day. This one is on cutting losses is the key to winning. Now that's an interesting way to look at it, and I would like you to have that training, so please listen to it. Now, as we see here on the first day of this latest 2-day candle, again, might have things pulling through, heading down. The derivative oscillator, however, is green right now, so we will want to watch that too. It's important. We can see where things were down in the morning on Friday and then crossed over on the half-day chart going down in the afternoon, and we'll go ahead, rotate things around, and make a note of that. So that's where we are on stocks. Let's move on to bonds. Bonds up a little bit for the day, and this is the other one we thought might be crossing over. This would have been a down move, but not enough. If you look on the left-hand side of the screen, you'll see PPO below that horizontal gray bar, and below that EAVE8. That is the exponential moving average 8-period line. That is our red signal line, and they are laminated, so we did not have a crossover going down. Derivative oscillator still green and losing momentum. Price percent oscillator heading down, but no crossover yet. Red down candle for the week with a long wick on the bottom. And as we go to the 2-day, first day of the latest 2-day candle, we can see where, again, it hasn't penetrated that 2-day trend line. It has turned from a red down candle to a green doji. Lots of indecision, tending up, but that price percent oscillator still stroking down. Derivative oscillator looks like it's still gaining a little bit of downward momentum. Go to the half day. You can see where things bottomed out on, that would have been Wednesday morning and afternoon, about the same place. And then Thursday morning started moving up. Thursday afternoon, Friday morning, Friday afternoon, just below that 2-day trend line. Looks like it did cross over at the end of the day. So that will cause us to go ahead and take and redraw our, here we go, redraw. This is how easy doing all this stuff is. On TC2000, which is the charting platform we use, we'll redraw our trend line there. I wish I could connect all 3 candles. It was sort of close, but we'll do it the right way. That is where we are as we look at bonds, so no crossover there either. Let's look at gold. What do we see gold doing? Well, gold getting really close to crossing over, going down. And in fact, you can see here on the weekly chart where it moved down and then started pulling away over the last couple of weeks. Went from red down candles to a slowdown with a green, solid green spinning top, a slowdown in the down movement, and then a reversal last week, the 23rd, that shortened Christmas trading week. And then, of course, this week moving up, pulling away. Of course, we look at the 2. Let's make sure we've got our, well, can we draw much of a better trend line there? Not much, but okay. Let's look at the 2-day. What you see going on the 2-day chart, we can probably make this a little better. What we see going on, oh, wait a minute, that 2-day candle hasn't finished drawing yet, so we can't use it. Remember, if you try to draw on a candle that's not finished drawing, your trend line will flex and move around on you, which is not helpful. So maybe I'll just go back to where I was before. And can we connect? Still can't connect 3 candles. Well, what we see happening, though, is we had that crossover on Thursday, that recross on Thursday, where things, and again, that was our 2-day, 1-day, our 1-day, 2-day candle. Remember, the markets were closed Friday. The chart still accounted for it, so it basically made this 2-day candles just Thursday. Monday, Tuesday, we saw things moving up. Wednesday, Thursday, a slowdown in that up move, and then the move resumed up on Friday with gold. Price percent oscillator heading up, derivative oscillator gaining upward momentum. Half day, again, like the weekly, you can see we got close to crossing over, going down, and then sort of bounced off. Moved up higher over the last 2 days. Again, which is good to see. I want to see gold just take off. But that's where we are on gold. Lastly, go to Bitcoin, up a little bit. Now, we've seen a lot of down movement in Bitcoin this week, up 1.19%. And as we ended the week, again, Bitcoin stayed above this 50-period moving average line, which I think is important. Maybe that's where the down move's going to stop. Bitcoin will take off, moving back up again. We'll wait. We'll see. That price percent oscillator still pushing down, derivative oscillator still pushing down. So still lots of downward pressure. On the 2-day, we see it flat right now. We see these last 2-day candles, again, only counting for 3 days of movement because this Friday candle won't finish drawing until Monday. It's a 2-day candle, first day of it. Derivative oscillator losing downward momentum. So again, That's all well and good. We'll see if we get a crossover going up over the course of this next week. Again, we still have that downward pressure from the weekly. We look at the half day, we can see where that price percent oscillator is about laminated as things moved down, slowed, and over the last day, sideways and up a little bit. Hasn't crossed over yet going up. Still, still below because it's negative. Still below the red signal line. So again, derivative oscillator still negative too. So overall, mood in Bitcoin, maybe some of that downward movement is slowing and things are getting ready to take off again, but it's not happened yet. So there's no point trying to jump into a practice trade. All you're doing at this point is gambling. We want to follow established trends. When they establish, we'll jump in and follow them. Does it mean you get every single dollar? No. But it also means you don't get killed and that you get in there and you get that safe chunk out of the middle, which is what you want. You don't want to get run over by a bus. Hogs get slaughtered. So that is where we are, folks. Hope that you are having a wonderful New Year's weekend. And we look forward to this market opening back on Monday and a great new year in 2022. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.